It is a good morning. Uh, it's Friday, NFP Friday, and I just wanted to share with you guys. It just hit 10:30. This is a very important place in the market. When you see these form, these double tops with the same highs or relative equal highs, kind of like this in Nasdaq right here, always attack that. Uh, I'm looking at a 15-minute chart on both of them right now. But NFP declined us first. It's usually a two-stage event, and so I do believe that it's going to come back around, and I'm watching that this morning. This is what a seasoned trader looks for. There's also these relative equal highs before 1650-ish. Yeah, 1645, but it's also a nice draw. Good buy side liquidity pool that was left in the morning. Gotta be wary for these um, for this right here. Sure, retail's looking at this and they're seeing support. So I don't, I want to see price just run below these lows right here. Maybe get animated down below here too, but I wouldn't even like to see that. Probably watch this wicks consequent encroachment. 59 and a quarter. There we go. Yeah, that's that retail support right there. Retail trendline support. What a joke. Go. I do want to see if it wants to reach for this sell side liquidity pool. Pink. A2000 EST OCOEE. I'm really liking this fair value gap right here. I wanted to turtle soup this sell side liquidity pool, but I don't think that it's done bleeding yet based on how it's reacting. As for ES, the turtle soup is turtle souping. 78 and a quarter. 3/4. All right, so we'll go long here. I like this buy side liquidity pull right here very much. So we'll just hold one contract for it. I'm gonna go let my dogs in, let this run. My stop loss is gonna be beneath this low right here. I'm gonna risk 30 on this one. So I'm only going in with one contract. I'm gonna go put my stop loss a little bit, know this bullish order block, so it has room to wick. But ultimately, I don't want to see any closing basis above this. So yeah, all right, I will be right back. So what would I like to see? What would I like? What can I? Can you guys even hear me? What would I like to see? All right, let me swatch this. What would I like to see here? Another bullish candle right here. Why? Bullish order block theory. Down close candle should be respected in an up move, and we must create consecutive up close candles before that even happens. So in these next 40 minutes, you want to see price just run up. And so as soon as we come back down to touch this level right here, if we do, we should see support and send us higher to this buy side liquidity pool. All right, stops moves to 73 flat. So we got in on the inversion fair value gap right here. We do have this little fair value gap as well. This should remain unfilled. Mhm. And there's that. So you had trend line support that retail is finding here. What does price do first? Raid liquidity. Takes out all the longs that trail their stop losses or think that this is a support in any sort of way. And as soon as that's done, then the real move comes. Are we ultimately drawing to this buy side liquidity up here for the 15? Yes. Yes. So then why didn't I hold for that? Well, that's called greed. Even if it does run up here, that's fine. Was I willing to risk $60 on one trade today? No, not really, because I know what it's like to work and only get 120 bucks in a day, and I'm not gonna waste half on that in a day. Yes, eventually in time I will, because this example right here is exactly what I like, what you need to experience and what you need to feel um, before you're confident and able enough to go and do that. At the point I'm at the stages I'm at right now, I was only willing to risk one. That was it. That was fine. And that's the beauty of it. You can only, or not can only, it's not bad to only do one contract because one contract gets you used to holding a position longer than you want. I usually only look for 20 handles, right? And 20 handles in NASDAQ is 40 bucks. But however, you just saw me haul in $91 right now. Why? Because I'm not tripping over the outcome. I know price is likely to head here because there is liquidity up there. I know the reason behind it. And so I am very comfortable with it happening. It's like I come into work on Monday. I don't expect, or if I'm scheduled for work on Monday at 3:30, I'm not going to show up at 12 o'clock. Why? There's no reason to. I, you're either going to get marked up, you're going to become late or early, depending on which 12 o'clock you're thinking of, and there's going to be some fallback to it. With trading, it's the same way. You show up exactly when you think things are going to happen, not when you think when things are going to happen. What time did I tell you guys today? 10:30. 10:30, an hour after the opening bell, which is at 9:30. That's when shit starts to happen. Come on, let's go take a look. 10:30. Boom. This is your 10:30 candle right here. Here comes the second sell side or buy side liquidity pool. NFP Friday, y'all. Anyway, 10:30. What does price do? Rate liquidity first. Then what? What happens after liquidity is rated? The real move comes. The people that are not fortunate enough to be in the real move. This is the real move right here. Did I troll soup it? No. Why not? I saw this fair value gap right here. That was a potential draw. And from this candle's low right here to this high, that's a little under 20 handles. I was not going to risk 40 bucks on that because it could have definitely drawn there. So what did I wait for? More confirmation. Where was that confirmation? Right here on this candle at 1034. This is an expansion candle. That is an elephant in the room. That's the one that says, hey, we're going to go up higher. So what do? I buy the inversion fair value gap here. You see this candle's low to this candle's high. As soon as we close overneath that, I want to see this act as support. And I know that there's going to be a fair value gap left on that next minute. Where does price close? Above this fair value gap. We dig into this once again, leave a bullish candle, and then this candle right here tells me everything I need to know. We leave another breakaway gap right here, and it's just beautiful. Beautiful stuff. Beautiful stuff. And so I showed you guys the account at the beginning of it. This is real money, real people, real money type stuff. And we're gonna continue growing. I showed you guys the account when it was at 1200. We're gonna get it to 2400, and it just takes baby steps like that. These are the base hits that get you to win the game, not a home run. Because if I get base hits, base hits, base hits, it's better having three people on base than hitting one solo home run, right? All it takes is one good at bat, a little double, and you have twice more than you would get in a home run, and it's more consistent. So I hope you guys found this one insightful. Uh, I know I said in the group in the Disky that I wasn't interested in anything, but for some reason I just woke up today and I was like, huh, it's like 7:15. Let me go see what's good in the markets. And then you go and see this right here. I go and see this. And I automatically think what? Price is going to go higher because people are not safe there. They're going to get destroyed. And so there's a destroying. Um, in the future, what I could do better now is once I have a bigger portfolio, because I'm working with a very small account right now. If you take 1300, I'll take my calculator out. 1300. What was that count at the beginning of this video? 1270? 1270. I'm timesing it by 0.98. Why 0.98? That's 2% of my account. And so that comes out to 1244.6. It's inverted, but you guys can see. Start from this side. 1244.6. And so I was basically $4 over my risk allotment. Why? 2% of your account is what you should be risking per trade. And so when you know you're only risking 2%, it removes all fear of being wrong because you know you're managing your risk correctly. If you get it wrong, so what? It's only 2% of your account. And your win, if you should win, should be a lot more than you're putting up, that risk. The reward should be a lot better, I should say. And this reward was much better, 91. So that was a little over a 45 handle haul. And if I had two contracts, it would have been, yeah, pretty gnarly. It would have been about 61, 62-ish handle run. So, I mean, you guys saw it called live, real time, all before it happened. And it's the logic being used. I mean, you can't get any better than this, to be honest. You're not going to find this. I mean, it's real live money. It was a small account for sure, but just give it time and hey, man, that's scaling. Scaling. Just let time do the heavy lifting. Keep your risk small. Take your base hits. Trust in your work. I'm a great trader. I have great intuition. What stopped me from being a great trader was over leveraging and overexposure. With this trade right here, I'm content. I'm going into the week and I'm taking my profits. I'm done. I'm cool. Like that's good for me. You know what I'm saying? Like, oh yeah, that's good. I'm closing my trades right now. Here, look at I log out. Boom. Just fuck it. Take away all this stuff because I don't like all this makeup. I wouldn't like to have it if I didn't have to. But I'm a content creator, so that's why I do. Boom, 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 boom. Here comes that buy side liquidity in ES. Um, anyways, um, something else I really wanted to point out is that it doesn't really matter what you believe in. It's about how hard you believe in it. Um, I I've been calling the markets for fucking months now. For months. For those of you that follow me on Instagram, ever since the end of September, I've been posting about where the markets are headed, why, and for those of you that are fortunate enough to listen, um, it's all here. I'm your man. If you want to learn about why the markets book the way they do, I'm the person you need to talk to. You're not going to need to talk to anyone else because this is the truth about how price is booked. It's no gimmick. It's price and time. And if you're going to be putting your money on something outside of price, of something that's engineered on price alone, you are a clown. See this little button right here? This is bullshit. You don't want to rely on those. If you're going to be relying on those, go put a bet on whether your fucking RSI is going to go up and down because that's horseshit. There's no indicators. It's a bunch of it's a load of crap. That's what it is. If you're going to be placing your money on price, rely on price and price alone. Everything you saw me gauge right here was from specific price points. This candle's low to this candle's high. That's a fair value gap. As soon as price closes underneath that, it becomes an inversion fair value gap, and you should expect support to be found from it, Where does it reach to? The consequent encroachment of that level. Let's draw this out one more time, right there. If I put a middle line on this, pink, white, it falls just short of the consequent encroachment line right there. Why is that a good thing? Oh, you didn't say, my bad. Well, I thought you said it went to the consequent encroachment line exactly. No, it went a little bit above it. Would you want to see it? As soon as I get into this trade right here at the very top end of this range, would you want to see price go this far against you right here? I wouldn't. And so me seeing that, that doesn't even, it fails to reach the consequent encroachment of this inversion fair value gap. That's golden for me. And then this candle, I see it bleed just a little bit, but ultimately I start to see green consecutive up close candles. Why is that a good thing? Because down close candles should be respected in an up move. Right here, we didn't even get to, like, it was so bullish. It was such a hurry to reach to this buy side liquidity pool that it just said, fuck that. We're having breakaway gaps. We don't care about needing to rebalance anything on the way up. We're headed exactly for it. This right here, this is a high, pause, rewind. This is a low resistance liquidity run. There is not much resistance in the way of price running to where it wants to head, where it needs to head. Where does it need to head? Liquidity. Above old highs, especially relative equal highs. See this right here? These are relative equal highs. ES is going to go higher than 49.64, I promise you that. And relative equal lows or uh, a swing low. But the relative equal lows as soon as you see that market in your charts, because more likely than not, price is headed there. Um, well, this trade woke me up, so I don't know what I'm gonna do now, but I'm gonna do something. And with that being said, I hope you guys found this one insightful. Again, Slim Trady out. Deuces.